Hello everyone, welcome back to my channel. Today, we have a very significant issue on our hands, one that could potentially redefine the cryptocurrency landscape in the US. It involves the US Securities and Exchange Commission, Coinbase, and a request that could have far-reaching implications for the crypto industry in America. First, let's get a bit of context. Recently, the US Securities and Exchange Commission, or the SEC, asked Coinbase, one of the largest cryptocurrency exchanges in the world, to halt trading in all cryptocurrencies except Bitcoin. Now, why is this a big deal? For one, the SEC's request is an indication of its intent to exert broader regulatory authority over the market. The implications of this for crypto businesses in the US are immense. Brian Armstrong, Coinbase CEO, shared these revelations with the Financial Times. According to him, the SEC made the recommendation to stop trading in all other cryptocurrencies prior to suing the exchange for failing to register as a broker. The SEC's case identified 13 cryptocurrencies on Coinbase's platform as securities, claiming that by offering them, Coinbase falls under the regulator's jurisdiction. However, what's even more alarming is that the SEC asked Coinbase to delist every single one of the more than 200 tokens it offers, with the sole exception of Bitcoin. Armstrong quotes the SEC as saying, "We believe every asset other than Bitcoin is a security." But the SEC, reportedly, did not explain the reasoning behind this conclusion. If Coinbase were to agree to such a condition, it could set a precedent that would effectively render most of the American crypto businesses as operating outside the law unless they registered with the SEC. Armstrong was quoted as saying, "Delisting every asset other than Bitcoin would have essentially meant the end of the crypto industry in the US." He further stated that this situation didn't really leave them with much choice. Going to court seems like the more logical step to take for Coinbase. That being said, oversight of the crypto industry has always been a gray area in the US, with the SEC and the Commodity Futures Trading Commission continually battling for control. The SEC's recent move signals that it might be adopting a more strict approach in its attempts to regulate the industry. It's worth noting that Ether, the second largest cryptocurrency, was absent from the SEC's case against Coinbase. It also did not feature in the list of 12 crypto asset securities specified in the SEC's lawsuit against Binance. According to Charlie Cooper, former CFTC Chief of Staff, many American crypto companies, which have built their business models assuming that crypto tokens aren't securities, would have to stop operations immediately if told otherwise. Peter Fox, a partner at law firm Skolage, Peters, Rosati and Fox, has also weighed in, expressing that public offerings or retail trading of tokens might not be possible without some form of intervention from Congress. This latest development between the SEC and Coinbase undoubtedly raises questions about the future of the crypto industry in the US, especially if a settlement involves Coinbase delisting every token other than Bitcoin. What do you think about this situation? Let's start a discussion in the comments section. Remember to like and subscribe if you haven't already, and hit that notification bell so you don't miss any of our updates. Until next time, take care.